Good morning, everyone. It is Tuesday, February 20th, 2024. Let's go ahead and jump right into it here. I am starting a couple minutes late, so don't want to miss out on anything. So let's go ahead and jump back to Friday of last week, see how things played out. And then we can talk about the holiday, but there's a reason we were closed, and you guys can see why. So let's go ahead and jump back and go to the open here. And on Friday of last week, we were talking about there being, this really beautiful recovery. If we go back to, the couple days before, the market had sold off, and then we came all the way back, but then we fell just in front of the all-time high, right? And we said in the pre-market that things still look really strong, but this could be the case that, one of the perspectives we had was this could have been an attempt to come up to the all-time high. We then failed, and then from there, and let me see if I can go back here. Let me actually pull up the 60-minute so we can see all this. Bring this up. So the all-time high was back here, up at 50.66, 50.67, just in front of that target we had to the upside. So last week, as we were rallying all the way back after this pretty aggressive sell-off from the week before, we were talking about how we were coming back up all the way up to maybe test the all-time high. But one of the perspectives we had was that maybe this was a failure just in front of the major high that could lead to a deeper pullback. And it was hard to say because we came into the open and this is what we saw. We had a really, really nice, strong push. And so it was really going to be dependent on what levels ended up holding for our bias. And so that's kind of what we were looking at. We were looking at a couple different perspectives. We were looking at 49.92 to 96 being a very, very, very important little zone down there, in addition to some other levels. So let's just see what ended up happening here. It wasn't, so I guess to put it this way, it wasn't a nice clear-cut directional day where we had a bias for one direction only. It was open to what was going to happen, holding below VWAP, getting down through the overnight low. All these things are now check marks for our bearish side. And so market open, and literally within the first few seconds there, you had an opportunity to try and fade right off of the VWAP, right? So market opened 8:30. Within 10 seconds there, you had an opportunity with a potential bearish divergence there on the 512 at the minute. And you would have captured the entire sell-off for the entire morning. So that was a really good one. We did get the crossover here, and then it was a pretty aggressive hold all the way down. Held the FMA the whole way. These are just little shy pushes of maybe 1.5 points maximum there. And I don't want to misspeak here, 37.5, yeah. 1.5 points, couple ticks, maybe 1.5 points here as well. Never broke by more than 2 points and went ahead and continued chugging lower. We had 31.5 on the board there as a major support and resistance because if you go back to the last few sessions, 31.5 has been a very relevant level. But because it was such a strong sell-off, they just went right through it. Absolutely no reaction. And then again, held the back end of the FMA. Finally, once it got through the next major scaffolding there, and then we began the rotation. So there were some really good short opportunities if you were getting aggressive on that way down. Unfortunately, I can't sit here and say, hey guys, look, we just stair-stepped every level, because we didn't. We basically held VWAP, and then it was a very strong knife cut all the way through all the levels. And then we came down and bounced just in front of the low of the day before. So they kind of, what did we make it by? Maybe 1.25 points or 1.5 points away, 2 points from the low of the day before. And then that began the major rotation of the day. Again, not necessarily coming to one of our roadmap levels, not necessarily stair-stepping beautifully to the upside there at that point. But then we got the stair-step right off the scaffolding, right off 31.5, and then came all the way back up, only to fail right at the close of the day before. Now, on the way up, you did have those aggressive opportunities, again, buying off the scaffolding, off of the 200, and then this deeper pullback, which was also a nice, healthy retracement of that leg right to our, our scaffolding. And then once it started to break out again, you did get some aggressive opportunities off the FMA all the way up. And then we got the pullback again right off the previous daily close, getting a bounce off the 200. Again, another opportunity there with very limited risk where you could have grabbed at least 5 points off of that level. And then it came back and tried to hold below VWAP again, but it was very short-lived. And then we got this little pop to come back up and test up into the previous daily high and where our HOPL was. So again, decent aggressive opportunities if you were buying the FMA. And then that was it for the day. We got a pretty strong sell-off after they tested into the high of the day before. And this is, again, from a more zoomed out perspective, if we looked on, say, a 60-minute chart, what we would have saw was the high earlier in the day, or the overnight session. Remember the high that failed just in front of the all-time high. And then later on in the day, we try to come back up. Look at this beautiful bullish recovery, and then fails just in front of that overnight high. And then that begins the much deeper sell-off, right? So that is, I mean, this is, from a fractal perspective, just a more zoomed out, or actually is exactly the pattern that I talk about when I'm looking for sells, looking for fades of the market, seeing price try to come back up after a strong rally, right up to near the high, and either fails just in front of it, makes a double top, or gets a peak above and fails. So that, my friends, is again just another textbook example in the market of that type of situation playing out. So we get a strong rally, we failed just in front of the overnight high, we get our crossover, and then we get this really aggressive sell-off. So if you wanted to capture that sell-off, you did get plenty of opportunities off the back end of 31.5. There's that level once again. Now in this case, we did get some peaks through. I don't think it was just under 2 points. So if you caught it, you shouldn't have been stopped out. It didn't go all the way to 33.75, and you could have actually captured the sell-off from there, or from the 200 to the tick. And there it is, the failure just in front of a major high, the crossover from our two moving averages on the short time frames, and the tag of the 200 to the tick. And then from there, we get the sell-off, and what do you know? We come down and come down right in front of the previous daily low again. So it basically came back and tested right into the low of the day. Now this level here, you see, 50.13, is just that major swing low that we made on Friday. So that's not a level that was on the chart. That's a level we have for this morning, because it's going to be relevant as a major swing low. Not only was it the last naked swing, but it's also the swing from the morning, and I think it even goes back a little bit further as well. So that wasn't on the chart, but it is technically the low of the morning session that we came back and tagged into right at the end of the day, only to bounce off of it to the tick, and then get this rally coming into President's Day on Monday of this week. Of course, it was a very low volume, very tight range, and didn't really do much. Again, this level here, it wasn't on the chart for yesterday. This is the level for this morning. So nothing notable to talk about on President's Day. That's why I tell you, on most of these holidays, there's no reason in even doing a pre-market report, because typically it's so low volume and such a tight range that it's not worth putting risk on in the market. If you trade in with real money, should be making smart decisions and waiting for the best business opportunities, and that wouldn't be it on President's Day. So we got, I know, a bunch of chop in there, nothing notable to talk about, and that brings us here into our overnight session, and it looked like the bulls were maybe going to recover, right? Yesterday, President's Day was technically a blue, for me it's blue, for a green candle, a bullish candle. We tried to kind of push to new highs, and then we failed out coming into Tuesday morning here, and this is how it looks now. So what we've done is just kind of held the back end of the VWAP and are continuing to come down lower. We did get some really nice parries here that I want to mention. First one being the test of the low of the day before when we came in the overnight last night, testing right into the low of the day before, VWAP, and I guess FMA would have been the most accurate level there, but basically testing VWAP in the low of the day before, and then getting the rejection, so that was a very notable event. And then the fact that we bounced to the tick last night, if you had 50% of the previous week up, I didn't have it on there for you because we didn't have a pre-market yesterday, but if you could do your own homework, plot the 50% of the previous week, you would have had probably the best trading opportunity last night, right? Buy 50% of the previous day, take on no risk, maybe one tick, and you got a beautiful push right to VWAP. So you could have grabbed just under 10 points to the upside. And again, in my opinion, would have been probably one of the sexiest things you could have done last night before it got too late to really do anything. Because unless you're Neil and you're up until 2 in the morning, it's, and you're not even in the right part of the world, but, it's typically people aren't trading all the way in the middle of the night there. So great opportunity. And then as you can see coming into the open, we have parried now right off of our roadmap level. And this is, my friends, the major zone that we've been talking about every morning for multiple days, maybe even weeks now. And that is this zone here, 49.92 to 96. Okay, so pretty much to the tick off the scaffolding. But that's the zone, if we go up to the higher time frame chart, that we've been watching now as being a very critical area for the bulls to hold. And so far, coming into the open, they have held it. In fact, the problem here is that we keep getting rejections off of VWAP. So we're in a very critical little battle area here. You guys know I've been using that term, our battle zone. That's usually where we're at, kind of a critical point in the chart where if we hold, we get a check mark for the bulls. If we end up not holding from here, we now have a much stronger check mark for the opposite side of things. So this is going to be very important. Not only is it that major zone we've been watching, but it's also 50% of last week, a very important line in the sand. So this is a critical point that we're at. And unfortunately, we're opening right here at that area. But let's go ahead and jump up to the higher time frames and take a look at what the charts have to say for this morning.